Hello guys, welcome back to yet another episode, and in today's video we are going to look into lesson number 2, Forex lesson number 2. Before you even move further, if you're new to the channel, don't forget to hit the subscribe button, turn on the notification bell, and of course if you find value in this video, don't forget to hit that like button for me, since it helps this content to reach out to more people. So for today's lesson, we are going to look into something very interesting, and in today's video I'm going to introduce to you something what we call what is a pip. What is a pip? So we'll start with the definition of what exactly a pip is. And in Forex, pip means the smallest amount of movement that the market makes. Or the smallest amount of movement that you get to notice in any market, that is in any currency pair. So in our previous lesson we talked about the currency pair, and we are continuing to introduce the same concept in these lessons. And for today's lesson, as I said, we'll be looking into what is a pip, and I've just given you a definition. It's the smallest amount of movement that you can get to notice the market has made. So I will be showing you some examples in order to emphasize and of course to help you understand more about the same. And for this case, let's look into, since Euro USD is the most popular, this is the most traded currency pair, the most traded currency pair. So with this one, we'll be using it. You'll realize I'll be using it over and over for you in order to understand exactly what I'm talking about. So with the Euro USD, this is what you need to do. For instance, as I said in our previous lesson, you might realize the coordinates that are there being reflected on the chart. For instance, Euro USD, it's at 1.2. It's at 1.2400. So like that. So, and then you realize this market with time, since it keeps moving each and every time, you notice the market has moved from 1.2400 to it has moved to something like 1.2433. So this difference in between, the movement between the initial market position to the current one, this difference is what we call the pip. So I'll be showing you how you can get to calculate these pips in just a few minutes, and it's very easy. So to start with, hopefully you have already understood that the pip, what we mean by pip is the difference between the two, the previous position the market was and the current one. So that's what you call what is a pip. So what I want us to get to do now, I want to show you how you can get to calculate these pips, and why calculating pips is very important when it comes to Forex trading. So this is what I'm going to do. Let me just so for today's lesson we are talking about pip. So for instance, let's talk over a different how you get to calculate pips for different currency. So number one, we normally have the non-JPY currency, the non-JPY currencies. So what do you mean by the non-JPY currency? These are all the currency pairs that don't have JPY in their combination. For instance, these are, for example, let me just show you an example. The non-JPY currencies such as Euro USD, we have GBP USD, we have GBP JPY, sorry, not JPY, we have NZD. What I mean by this, by the non-JPY currencies, are all the currency pairs that don't have JPY in their combination. Hopefully that's clear. Another thing, let me show you another currency combination. We have the JPY currencies. So with the JPY currencies, they are all the currency pairs. Let me just give you an example here. These are all the currency pairs that have they have JPY in their combination. You could be having something like GBP JPY. You could be having USD JPY. Either it could be even on the base option USD. So all these all these currency pairs that they have JPY in their combination are what we call the JPY currency. For my case, for people who are curious which currency pair do I normally trade, my favorite are just two, but I mainly get to trade GBP JPY, but at sometimes I also trade GBP USD. But this is my main currency pair. That's the currency pair that you realize in most cases that's the currency pair that I normally trade. So we have these two type of currencies, the non-JPY as well as the JPY currency. Hopefully that's clear. This is very, very important when it comes to calculating pips, since it's a bit different for each one of them, and I'll be showing you as we get to move forward. So let me just get into how you get to calculate pips for the non-JPY currency. For the non-JPY currencies, how you get to calculate pips. By this I mean, let me just give you an example. For instance, this could be a currency like Euro USD. For this case, let's say for an example, you say the market moved from 1.27433, and then from here you realize, for instance, it's usually 4 decimal places, and then the market got to move to 1.2783. So how do you get to calculate the number of pips in this one? So this is what you normally do. You get to count, for example, you get to put like that, then you get to split it like that. So this one is usually 1, this one is 10, 100, 1,000. So that's how you get to put those decimal places. So for instance, if you get this one is at if you get to subtract this one and this one, you get a 0. Let me just put it this way. We have 1.2783. You get to subtract 2743. Get to subtract this. So this 0, this is 4. So technically, this market just got to move 40 pips. Hopefully that's clear. So if the market initially was at 1.2743 and now the current market position is 1.2783. So how you get to calculate the pips is just you get the difference of the two and you'll be good. So basically this market got to move 40 pips. So let me show you another example in order to understand clearly. So for instance, the market got it was at 2400 and it got to move to 1.2343. So let's just do the calculation here. So what you do is you get to calculate the bigger number, but you realize this one, the current market has already dropped. So it's important for you to also have that in mind. So 1.2343. So you do the subtraction. This is 9, we have 7, and we have 5. So basically the market has moved minus 57 pips. The minus has come because the current market position has dropped from the initial one. So that's why we are saying it's minus 57 pips. Hopefully that's clear. Let's proceed. We get to look into how you get to calculate for the JPY currency. In case you have any questions, just talk to me on the comment section, and I'll answer the question during my free time. So let's look into JPY currencies. These we have currencies such as GBP, JPY. So for instance, the market moved from 1.23, it got to move to 110.27. So if you have realized the decimal places is not the same as initially it was for the case of the non-JPY. So for this case, this is what you normally do. This is 0, this is 10, this is 100, this is 1,000. So hopefully you have seen some difference as compared to the non-JPY and the JPY currency. So how do we get to calculate these pips? Let's do the subtraction right here very quick. We have 27110.23. So as you can see, the market just got to move 4 pips. And the JPY currencies, they're usually very, very volatile, meaning they get to make big moves each and every single time. So it is important as you get to trade them, you do proper risk management as well as calculating your lot sizes, of which I'll be showing you as we get to move further how you get to do all that. Hopefully you have learned something new, and hopefully you have already hit the subscribe button, turn on the notification bell, share with a friend, and drop a comment. I really appreciate. That's it for today, and of course I'll be looking forward to seeing you in our lesson number 3. Have a good time, and of course enjoy watching the other videos. Peace.